Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Hope you all had a very nice Memorial Day weekend. I know that I did. Maybe we'll share some stories, or maybe you already heard those stories if you were tuned in to the surprise stream yesterday. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Got a lot to discuss today. We got 3 whole days to catch up on news for. So we've got a deal this morning. Cloudera is getting taken private. Some software names are up in sympathy with that. The AMC squeeze is continuing. Well, I don't know if you want to call it a squeeze, but there was a piece of news. We're going to talk about that. AMC, BlackBerry, and more. Everything is up today is basically the theme of today's show, right? Because everything is up. I see Bitcoin, I see gold, I see oil. It's all up. Everything is up. 2 guests on today. Nick Shaheen on at 8:35. He is, of course, the author of Create Income with Option Spreads, also the author of the Benzinga Options newsletter. The link is in the description. Also, Matt Hammond from IPO Warriors will join us at 9 to talk about IPOs for the week. Before I throw it to Joel, reminder, smash that like button, please. Thank you very much. Let's get the week started off right. And now I will throw it to Joel, who will tell us how up are we this morning, Joel?
Up and away, Spencer. That little dip Sunday night and Monday. Buy the dippers came in, made a low 41.90 in the Monday session, 91.75 starting last night. We're up 23.5 handles. Have some good levels on the upside to take a look at here in a few minutes. Crude making a new high for the move, up $2.02 at 68.34. Gold in the green by 660 at 19.11.90. Silver in the green by 40 cents at 28.41.5. Bitcoin in the green by $710 at 36,535, and Ethereum up $108.50 at 26.26. I just see Microsoft tick down a few pennies here. That's probably a mistake. Triple D.
If there's something down, it's a mistake. And you're right, Joel. That was just an 8 o'clock trade. There you go. Microsoft is back.
Okay, now it's up a buck.
It wasn't a mistake. It was just an old cross from the close there. It was just getting late report apparently. So if it's down, it's a mistake.
It has to be. I mean, CRM and Dell
Stuff's not
unchanged.
allowed to go down anymore, Joel.
CRM and Dell unchanged, but they're probably bid
They're
up.
bid up. Oh no, CRM is offered flat. So something's going on in CRM for not being bid up here today.
Big
Viva Systems is down. Is there news on Viva Systems? I'm looking at my screen. I'm literally trying to cherry pick anything that is down here. I see Viva Systems is down. I see Abbott Labs trading down. I'm assuming ratings or something or news, but there is not a lot of stocks trading down here this morning. If you want to
Viva had a big day. Had a big day.
Is that what it is?
Friday. Yeah. We talked about this one. I'm like, well, it looks like the move is not over. I'll revise my statement on that one. Should have known. Took out the pre-market high. That thing never looked back, but just, it did settle near the low of the session. Maybe some profit taking in Viva Systems today.
Let's go. What's up?
Let's go. All right, everything is up. You want to start with AMC because there's actually news.
Sure.
We actually have some news on this morning.
Let's go.
All right. Filing should actually was a press release. AMC sold some shares. They sold 8.5 million shares for $230.5 million. If you want to do the math on that, it comes out to $27 a share, give or take a couple cents. They sold this to Mudrick Capital. This is the same hedge fund behind the SPAC that is buying Tops, and the same hedge fund that had previous deals with AMC. They'd bought some shares, or they'd bought some bonds in December. They had converted those bonds previously. They made a lot of money in January on out of the money call options in AMC. This is a firm that specializes in distressed equities, distressed debt. I don't know if you want to call AMC distressed, but maybe they are. Maybe they are. Maybe they aren't. In any case, they are. They're buying some AMC here. News out this morning. So AMC is up on that headline.
Okay, so here is the rant, and here's a little bit, questions. They're like, how is this trading up on this? I'm not surprised it's trading up on this because you do the math and you think, okay, you're selling this to a hedge fund on the side, basically, and they paid $27 for AMC. Like, real money came in. Like, obviously you got the stock market money, but you had this is a hedge fund giving a vote of confidence to AMC, saying it is worth what we're seeing. So I'm not surprised it's trading up. I know everybody on CNBC was questioning, how is this trading up on the dilution? This isn't just a secondary offering where they had to go way in the hole to get her done. The stock closed at $26.12. It got done $1 above where it closed. So, I mean, obviously there's an appetite from hedgies for AMC as well. So this is a big vote of confidence for AMC. I'm not saying I'm taking my investment dollars and plowing them into AMC, but it doesn't add to the bear thesis at all. I mean, it was an ugly tape on Friday for AMC to open up the highs, get back $10. You think, okay, maybe the story's over. So I'm not sure. Maybe Mudrick has some other shares and they just want to pump it back up. But this gives a little bit of a vote of confidence to it because this is a hedge fund that manages money, and they think AMC is worth $27 because they just bought $230 million worth.
It's worth more than that now.
Yeah, and they're obviously right. So, I mean, I look at this and think, okay, well, it's not just retail. It's not just, we've been saying, oh, it's just Reddit traders and eventually it's all going to crash and burn. Now you had a real investor. They have a real company. Maybe they already own shares. I'm not sure if they own shares.
That's a good question.
Yep. Because if you owned a pile of shares, this is a vote of confidence to get those shares a little bit higher. I'm not sure. But for whatever reason, Mudrick Capital thinks AMC is worth $27, or they probably wouldn't be buying 8.5 million shares up there. Well, so that does give it a vote of confidence.
They had previously exchanged some debt for equity with AMC.
So they do have some equity.
Yeah.
How much equity? Is it do they have 100 million shares? Do they have 50 million shares? Did this double their position, or did this increase their position just by a little bit? I don't know the answer to that question. maybe you guys can find out in the background.
In December, AMC signed a letter with Mudrick Capital that called for the hedge fund to buy $100 million of new secured bonds, and then they received a commitment fee equal to about 8 million AMC shares. And that was in December. There was another deal, I believe, in January or February. They already are in AMC. This isn't like
they're in, but they weren't in heavy. So this is a big investment for Mudrick Capital here, and it's a big vote of confidence for the stock. So I'm actually people coming in and naturally thinking the dilution here. You gotta understand markets a little bit more, and I'll try to teach you here today. Is that when you get the vote of confidence from the hedge, you didn't have to go way in the hole. Stock closed 26.12. If they had to get that offer down at $20 to get that money, you'd be like, okay.
Difference.
But this got done in a premium, and this is sold not to just Joe investor. This was sold to a hedge fund, so that's why the stock is trading up 17% here today. I am not surprised at all that it is trading up here today. And does 27 act like a floor now? I don't know if that's there's no offering on the table or anything, but that's where the vote of confidence comes in from under capital. So I think when you analyze and you really think about it, it's not surprising that the stock is trading up on this. So I don't think this move this morning is irrational. Do I think AMC is worth $30 a share? No. Do I think AMC is worth $27 a share? No. I'm not putting any of my hard working money into this as a long-term investment. As a trade, I'm not surprised. And as a trade, maybe I would play it. I've been in and out of AMC a couple of times just because there's so much volatility and you're watching it. And if I watch something for more than 5 minutes, I can't help myself. I have to trade it. That's why I try to take this stuff off my screen, because I just get like, I can see, I start tape reading it. And, and you start to try to scalp it and play it. And sometimes it works, sometimes it doesn't. But this is a huge vote of confidence for AMC. And this is another, food for all the Reddit traders who are saying, we told you this is worth more money. Now we have real investors coming in here too. So I'm going to give you that opposite view of what they were saying on CNBC, that this doesn't make sense, that it would trade up on dilution. This absolutely makes sense to me from just thinking about it from that perspective.
The CEO also took to Twitter. Was talking about the company and boosting it, saying, hey, we're back, we're strong, we're doing that. So that's obviously adding to the upward momentum in it today. Maybe just start thinking about movie theaters in a different light, in a different way after the pandemic. I mean, maybe people are going to be flocking back.
They are.
Streaming thing.
For sure, Joel.
Right. So maybe they'll start doing like some premium seating or, special events or bar mitzvahs or weddings.
The
I
NFTs
don't know what the hell.
coming, Joel. The
that's right.
NFTs are coming. So
yeah.
GameStop's doing NFTs. Why not AMC?
What's interesting is the different strategies that the AMC and GameStop C-suite have had responding to the retail hype, because GameStop is just radio silence, nothing. You hear nothing. They don't respond to media inquiries, nothing.
Well, they apparently launched a site about NFTs.
AMC, I don't know if you've been on his Twitter recently, but he is leaning in hard to the retail frenzy and he loves it. Of course he loves it.
He's getting rich.
Right, he's getting rich, but he's leaning in hard. So it's just a very different approach to the same phenomenon. I find that very interesting.
What is the market cap of AMC today?
Today?
Like right now, $30 a share. Do we have it in front of us?
I can pull it up.
I used to carry that information on my Ready Plus, and you can get it like in real time. But I just because I'm trading on its screen room. And screen room is sometimes worth like money to me. And I don't make money analyzing market cap. I don't have it on my screen like all the time. Like I got to go and add the field.
We could call it like 11 bill. I think is a.
I just want to give you some perspective.
Let's call it 11 billion.
It's worth $11 billion at today's price. So in 2014, what do you think the market cap of AMC was? In 2014, back when movies were even cooler.
$5 billion.
I was gonna say like 7, 6. I don't know.
474 million.
Oh.
Give you a perspective of what you're buying. Like this. If this is correct, I'm looking at marketcaphistory.com. If this is correct, which with all the dilution, we've been telling you that AMC is trading at this AMC is trading at all-time highs. I mean, you can look at the chart and you can say, oh well, it was higher before, but there wasn't this many shares outstanding. They've diluted the living hell out of the stock.
Yep.
So when you look, and I don't know if you want to go to the history, Joel, and see what the all-time high of the price is, but you've got to look at what is the market cap, because this is what people are valuing the company at today. So basically, they're saying today AMC is worth 20 times what it was 5 years ago. That's how crazy this market is right now. Does this continue on indefinitely? I don't know. I have no idea, when this party ends here. But right now, markets are completely disconnected from all fundamentals.
According to that same site, the market cap was $200 million last October on Halloween. Basically.
Yeah, that's right.
Halloween, it was $200 million.
And now it's worth $11 billion because they didn't have any dilution. They were almost going bankrupt then. And now all of a sudden we've decided that movie theaters are the best thing ever. So you can see in March it went to $4 billion and now it's $11 billion. So yeah, so $202 million back in October and now it's worth $11 billion all of a sudden. So I get the reopening trade. This is where I was going with this, Joel, because you were saying we're going to flock back to movies. I get it. I think it's all priced in. Like from a fundamental perspective, it's more than priced in here. That this is awesome. But you know what? It doesn't matter. You can't sit here and put your CFA cap on and do fundamental analysis on AMC because it is meaningless, because it is all FOMO right now. Nobody cares. You got a hedge fund saying it's worth $10 billion or whatever it is now because they just bought up here at $27. And they're probably just saying, look, the story's hot. We got reopening. Who cares where it's trading on market cap because this stock's going higher to the moon. There's people protesting on the street saying which signs were rocking around AMC to the moon. So it's promotional stock, a stock that everybody is talking about on social media. And the story is hot as hell. So that's why you don't short stories that are hot as hell. But I don't invest in companies that don't make any sense. And it just doesn't make any sense at this prices. So I will never invest in AMC at this prices. But as a trade, I get it. It's hot. Could it go to 50? Could it go to 100? Could it go to 500? Could go anywhere. But you know what? It could go to 0 too. It couldn't go anywhere. So I can't invest in something that is disconnected from fundamentals. It's just my own rules. I invest in stuff that fundamentally makes sense. It doesn't fundamentally make sense, but it doesn't matter. As a bias, I'm not going to short that and say, because that's how you really get killed in this market, saying there's no way AMC can be worth $11 billion and worth $200 million back in October. Well, it can, because this is the FOMO market that just runs on stories.
Well, I can't tell you where it's going, but I can tell you where it's gone. And it just went to 30.79, currently trading right off that high at 30.54. That was a big bar on Friday, so 36.72 was the high. So you do have some people stuck between here and 36.72, but that's it. That's just, if you're trading this either way, long or short side, keep an eye the pre-market high, see if you can get continuation through that. But I mean, just the $1, $2 swings in this thing during the regular session, it looks like it's pretty steady here. You found some support at 28 in the pre-market, but it's moving, right?
I love the chat. Ariel says Dennis Dick says AMC's price target is 500. that's how media will do it, right? Dennis Dick said AMC could go to 500. They'll pull that little, the media will pull that little clip and say Dennis Dick said it. Here is the clip. Dennis Dick says AMC could go to 500. But I didn't hear the whole rant before. It could go to 0 too. It could go anywhere. It's not connected to fundamentals anymore. It can do anything it wants.
I heard the words.
That's funny though. Ariel, I think Ariel is a joke, but it's funny though. That's a good one.
In case anybody was wondering what AMC is going to do with all this money, here's what the press release said. We're going to use it for the pursuit. Let's skip all that. We're going to pursue value-creating acquisitions of additional theater leases.
Sure, why not?
Why not buy more or get more theaters?
Why not?
As well as investments to enhance the consumer appeal of AMC's existing theaters. So I don't know what that means. Maybe they're going to do some cool virtual reality stuff. I have no idea what that means. Anyway, they're leaning into brick and mortar theater. You're going to get more.
Why not?
Why not?
Why not?
Yeah.
People want to throw money at you. Who cares? I mean, it doesn't matter at this point in time. I'm going to go back and look at Hertz. Why the heck did they not allow Hertz to come out of bankruptcy when they want to do that secondary offering? They blocked it. They should have just allowed it, I guess. Well, seriously,
I
if
forgot
they
about that.
just throw money at them, let them do it.
What's the new? What's that hurts?
Oh, what's the symbol? HTZYBKRFG
It'll
or
probably
something?
go up to all-time highs.
HTZGQ. HTZGQ.
Oh, that's GQ. You gotta like that.
Yeah. Anyway, it's at $6.
It's at $6.
Yeah.
But is that like, did it split? Where's the chart? Show me the chart of this.
No, remember that they're coming out of bankruptcy. Remember, and the shareholders did get something.
Oh, the shareholders are going to get something.
Yeah. So
okay, whatever. I don't even know how to invest in. I honestly don't know how to invest in this market. I know how to trade this market well. I'm going to continue to trade it on FOMO. I'm going to continue to trade it on headlines. I'm going to continue to trade it in all the different ways I trade it. But investing in this market, like I just look at it overall, and like people keep saying, I had my buddy Bruce there. Shout out to Bruce if you're listening. He's like, got a bunch of short-term cash. What do you think? And I'm like, investing? Trading? Sure. Throw it in your trading account, move it around. But investing? I'm like, not a big fan of investing in anything at these prices. So I'm sitting with a wad of cash here still too. But trying to buy real estate, but it's bubbled up too. So hopefully the real estate market eventually pulls back and I'm buying real assets. Because people are willing to, pay $3.5 million for a Gretzky card. I mean, everything is just inflated. You can look at every single asset class. We talked about this 2 weeks ago. You look at collectibles, and it's gone insane. You look at boats. Like literally, people are joking. Oh yeah, if you want to lose money, buy a boat. Used boats are up substantially. My buddy bought his used boat for $10,000 3 years. Just sold it for 26. I'm not joking. You never see used boats going up. He used it for 3 years and over doubled his money on it. This is the kind of market that we're in. People are just hungry to buy anything. And you can sell them anything right now. There's snake oil for sale everywhere. Everybody is selling snake oil, and there's a lineup for snake oil. So just be careful with your hard-earned dollars because it all ends in a bloodbath. But right now, the party is FOMO, and FOMO is hot.
Insider buy on snake oil, right? Insider buy.
Snake oil is hot too right now. So I mean, you created out of thin air. What about that crypto scam that they did? This is just the market. They raised like $20 million. Remember, I don't know if we talked about that on the show about 2 weeks ago. And then they changed the site and said on the site, we scammed you, and there's nothing you can do about it. That was, I don't know if that was real or not, but that was like a crypto, like where they're trying to raise money up to do something, and it was complete BS.
It's called a rug pull, and yeah, we cover that as well on our channel. Not on this show, but
yeah. So I mean, you're just in this market where there's so much dumb money out there. There is literally so much dumb money out there that everybody, is like trying. You've got real money, like you got hedge fund, you got other people that are like, there's this much dumb money out there, let's do it. I mean, AMC is taking advantage of dumb money too. But you know what? Can I come in here and short the stock? No. And you've got a vote of confidence from a hedge fund.
Can you get locates on that, Dennis?
What's that?
You can easily get a locate, right, on that?
Oh, I think so.
Yeah. Okay.
Maybe not. I don't know. Let's go look. Probably. I never actually even tried. That goes to show you. I don't even try to short AMC. Doesn't make sense, but I'm scared to death of it. People keep saying, oh, if you're talking bearish, short it. I'm not even talking bearish this morning. It is no good here. I'd have to go outside of my regular broker here. I could probably find it, though. But I don't know. I mean, the thing's hot as hell. It's trading so much volume. It can go anywhere. So that's what I'm trying to say this morning is AMC. I cannot predict AMC pricing day to day. That's why I really don't trade it. If I'm trading as short-term scalp, because it's impossible to predict this.
All right, let's move on. Let's cover some other stuff. Let's go, Spencer.
All right, moving right along. I get 21 on 20 minutes on one or two stocks. Let's get to a few more 100 likes here. We're at 200 likes. Let's get to 400 likes before Nick Shaheen on 835. Let's talk about software today. Cloudera,
finally,
CLDR going off the board this morning.
Sean Udall pick.
Yes, a Sean Udall pick. KKR is actually, there's more than one firm involved here, but the bottom line is the company is being acquired for $5.3 billion. Cloudera shareholders will receive $16 a share in cash. So 16 is your number.
And you're right there, 1588. So congratulations to CLDR shareholders. Sean Udall, I believe, is still one of them. He has been on our show multiple times saying he liked this, and he was wrong about it for a while, but eventually it's come back up, and it looks like Sean's going to end up being right on it. So nice trade, Sean. Obviously, I don't know if you're ringing the register today, but it looks like they're ringing it for you.
$16, yep.
Yeah,
You know,
so it's a nice move. You could say, oh, sympathy plays. I mean, cloud stocks, right? So, was there
Yeah.
100 of them?
yeah, I always
A
thought this
lot.
one should do better just by the name, Cloudera. We talk about cloud stocks, but yeah, it's
Hey, it has the best name.
yeah, it has the best name. A long time coming, $16. Looks like doesn't meet gonna have much regulatory problems with. I was going private, $16, 12 cents left on it. Trade a little bit over. I mean, it's been a long time coming. I don't know if anyone's going to come and top them, but $16, 15.87 is where it trade. I don't know why you would pay over $16 like it did in the pre-market here. But nice steady move up ahead of it. We were back at $10, so little, leading up to it, definitely had a rally. Now ring the register at 16.
All right. What about? Let's go to EVs for a second here.
Okay.
We do have some numbers out over the weekend. First of all, NEO got a pretty big upgrade today. I'll cover that as well. But it was Citigroup is giving NEO a buy rating and a price target of $58.30. That is specific.
Wow.
Hat tip to Citigroup on that specificity. Also, while we're at it, NEO and XPeng reported their May deliveries. NEO's deliveries actually fell month over month. They said it was because of the semi shortage. XPeng's did not fall month over month. They rose 10% from April to May. Obviously, both up huge year over year. You can't really compare that because they didn't really have deliveries last year. So anyway, NEO upgrade plus May deliveries, and XPEV also May deliveries were strong.
We were talking on the show yesterday with Mitch. We did a show just on Money Mitch there, and we're talking about. I don't think you can come in this market thinking on the Neos and stuff that you're going to get these 100% gainers anymore. And I kind of agree with him. I think you got to take the money when you got it. I mean, Neo has had a nice move. We went from 30 to 40 in 10 trading sessions, and we've been talking about this rotation of growth, and this was poster child for it. The beaten down. Not that this is a Kathy name, but it kind of goes in that whole, because obviously ridiculous valuation, but storied stock, and they've come back. So you've had a 30% up move in the last 12 days. I think the easy money's been made in NEO here now. You get this upgrade. Is this going to be, the top? The Citigroup buys the top? Maybe. But you got lots of resistance, lots of overhead supply. It doesn't get easy. It doesn't get easier. Do they have room to 45? I think it's room to 45, but you're stretching it now. The easy money's been made. We ticked when everybody capitulated back on May 13th, $30.71, and now it's at 40. So, I mean, this is a nice 30% climb here in the last week and a half, 2 weeks. That's why I'm looking on some of my names too, lightening up some of the growth names now because the easy money's been made. So anything that you had on for a trade, I think you start booking it. If you have them on for longer term investments, you try to hold it, like Penn, I put in there. I like the Penn story. I still think there's some longer term, there, but it's had a decent move too. I bought this at 76 or 77 a week ago, and it's 82. I mean, these are good moves. So, gone are the times, I believe, unless, maybe you're trading AMC, but gone are the times where you're getting these, 50% moves overnight and 100% in 2 weeks. And, like, oh, I want 200%. I think you got to be satisfied with some of these 20, 30% moves in a week and a half. These are huge.
Take your targets, if you get into these things. I mean, the second run up is a lot different than the first run up, just because the sky was the limit. You saw that in NEO when it went almost to $70. But I'm just looking at this thing, and just a number pops out at me, and I don't know if we're going to see that today or the next couple days. But you had 1, 2, 3, 4 highs between 41.22 and 41.95. Not a quad top by any means, but that just tells you some big seller out there was targeting the 41.50 area. Are we going to? That'd be another $1.50 today. I don't think you're going to see that. Perhaps you will. 40.28 is your pre-market high, but if it ran another $1.25, I mean, you just have to respect the 4 highs in the same area. First things first, let's take out that pre-market high of 40.28.
Gone is the condition of oversold on these stocks. They're not oversold anymore. And that was the only reason that I was like getting to where I want to buy some of the growth, because I kept saying they're oversold. And I was a day or two early. But, I started nibbling and dipping my toes in there because you could kind of see the growth wanted to rally. You could kind of see some stocks giving me a tradable bottom, like I was saying, like the Fubo, like the Fastly. I was getting hard levels where I could control the risk.
Lean on, something to lean on.
Something to lean on, like 40. I was like, it bottomed 3-4 times Fastly. You had a big insider buy down there at 40. I had a lot of reasons why I took a shot at, and I ended up taking the shot at 42 on Fastly. Now it's 47.70. So, it's worked out. But now you look and you're like, okay, well, I'm not saying I'm coming and buying it today. I'm leaning towards lightening some of this stuff up. Fubo has been a good move. I mean, from 20 to 24 in a week and a half or week is a pretty good move. Do I think Fubo's going to 30 again? No, I kind of just rented this. This is just a trade. That's why I sold half. And am I going to sell the other half today? I might. So, I'll see what happens. But I didn't like the candle I didn't like the Friday action in some of these names. It looked like some profit taking was starting in some of the growth names. So where everybody's saying, oh yeah, getting the growth's getting hot again. This was the story 10 days ago. At pre-market prep, we try to stay ahead of the trend. We try to get ahead of the trend. Where people are starting to say, oh yeah, growth is starting to look good again. No, growth has now run. Some of these stocks have run 20, 30% in a week and a half, 2 weeks. If you're coming in here now, you're a little Johnny come lately to the party. So I think it's actually time now to start lightening up some of the growth names that have run here for the last week and a half.
Right.
What let's stick with China for a second here, because what about the rest of the sector? Because China is up basically uniformly this morning.
What is going on in China? Because I see Baba's up $10 here. Yeah. It's a huge move. I didn't catch the headline. I didn't look that China was trading up. I didn't see why. Like I see FXI trading up $1.50. That's a big move. So we have all the Chinese stocks trading up significantly. Do we have a reason here? Chat, do we have a reason? Baidu's up 5 points. Across the board, they're up.
I've been looking for that. I'm wondering if it's reaction to the headline that they're easing the 2-child policy and now going to the 3-child policy. But that's such an economic long-term thing. I don't know. But I to answer your question, I have not seen any specific headline this morning.
They're saying it's the child policy in the chat too. So right now it's right. If you have 2 kids, then you get taxed if you have a 3rd kid or something, isn't it?
Yeah, they went away from the 1-child policy a few years ago, right? Now they're at a 2, but they have the same problem that like Japan has, in that they have a aging population and declining birth rate. Not that they're unique in that. The whole world has a declining birth rate, but China is trying to stimulate that and saying, okay, you can have now 3 children per family. Maybe that's the headline.
Maybe.
Yeah, I don't know. It's all
means more people to consume in the long term.
Chinese stocks have not been where the party's at this year, but every one of them is up this morning. It seems like.
Yeah, huge. I mean, and I think the dip on the Chinese stocks was a buy in a lot of these cases. I like Alibaba. I still own half my Alibaba. I was thinking about rebuying the other part I sold. I did buy it once and then I sold it again, and I don't know. It's a nice move up. So now I think on dips, I think, yes, absolutely. I think I'd be a buyer in some of these stocks on dips. Again, I don't like buying rips. So now you get the big move up. I'd wait a couple of days, dust settles, and maybe you get another chance with Baba under 220. But big move here. Big move for all the Chinese stocks.
Yeah, big move.
I like China at this point in time, like investable.
You liked it better if you owned it last week or, or even on Friday.
Yeah, you don't want Chase. Like that's the whole thing. I'm as a trade, maybe you can do whatever you want. Like I said, you can do whatever you want. You always have an out. But as an investor, I'm buying dips and selling rips. I'm buying dips on sectors that I like, stocks that I like. I'm selling rips on sectors that I don't like, or stocks that I don't like anymore.
Interesting. You got that 4 a.m. pop right to 225.40. And then you also just have this daily high here, right at 225.29. So you're getting a little confluence there between your pre-market high and a daily high. You've leaked $2 off that, so I think that's a good target. If in fact it can clear there, nothing on your dailies to get a little higher up. Let's call it 228.60. But first things first, take out the pre-market high. If you're looking just to protect some profits after you made that high, the lowest is traded at 222.90. A lot of times with Baba, just going back on my memory, a lot of that move is factored in overnight, and then it either digests the move during the day or fades a little bit. So make sure if you're looking for more on this, taking out that pre-market high, 225.40.
All right, 8:32. We're gonna have Nick Shaheen join us in a couple of minutes. I already see him here lurking in the background. For real quick though, I do want to ask Dennis to share a quick story if he can on
Okay.
market inefficiencies as it relates to news headlines. Because you were telling us, Dennis, that you made a trade. Actually, you made a round tripper.
Yeah, I screwed this one up.
You bought a stock. You bought a stock. You thought it'd move. It didn't move. You sold it, and then it did move after you sold it. So why don't you tell us about
I'm
this?
talking AFG here this morning, and AFG is trading up about $9 here this morning because they announced a $14 special dividend. You say, okay, well, that makes sense. You know what the messed up thing is? They announced that they were going to do this a week ago. And I bought this thing back on May 19th. Go to your Benzinga Pro headline. You can show it, Spencer. Back on Wednesday, May 19th, it was 518 in your Pro. American Financial Group today intends to pay a special one-time cash dividend of $12 to $14. They already announced that they were going to do this when they closed this sale of whatever the hell, this annuity business. So they announced it. So I bought it back, on Wednesday night because I'm like, okay, well, they're going to pay $12 to $14. That's going to pop. Crickets, man. Thursday morning comes. It doesn't go up at all. And I'm like, are you kidding me? This isn't going to go up. And then Fridays, more crickets. It actually starts going down. I'm like, I don't understand at all what is going on here. So I'm like, I'm just out. I actually lost a little bit of money on this because I didn't understand what's going on. And you can look back. This was back to May 19th. May 20th, 24th, we start leaking. 128. I was like, how? Like, I don't understand why it was going down when they announced they were going to give a $12 to $14 special dividend. But anyways, the market completely ignored it. Okay, so they officially announced it today. They officially announced it.
Gotta wait for the official announcement.
I'm like, this market is so inefficient. And, I'm stupid. I should have realized that when they officially announce it, not that they intend to. The intent wasn't good enough. You have to officially announce it. Duh. So now they officially announce it, and now it goes up $10. So I'm ticked off myself because obviously I made nothing on this, and I was buying on the headline that I was like, if they play a $12 to $14 special dividend, it will probably pop. They don't always go up the whole dividend amount, but they usually get a good lift from it. And I got nothing. So anyways, official announcement. Now it's up $10 this morning. So I have no idea. Would I fade this? I have no idea. I don't know why it didn't pop originally on the news. It makes sense that it's popping. But it would have made sense that it popped back on May 19th when they said they were going to do this. Now they officially do it, and now it pops. So that's this market. But you know what? If you held for the last 2 weeks, before this official announcement, or I guess 8-9 trading sessions here, congratulations. You're finally rewarded here this morning. I would not buy it up $8 here, though, because I already got burned on it once trying to pay up a little bit, figuring that it would go up $8 or $10, and then it went up nothing. So I don't understand this market at all. Very inefficient.
All right, good lesson. Let's bring on our guest here. Nick Shaheen is the author of Create Income with Option Spreads and sellspreads.com. Mr. Shaheen, how was your long weekend?
It was good, very productive. I feel like I've done some stuff, even though I probably didn't do much, but I tried to relax, catch up on some sleep.
Good.
Sleep is very needed.
Good. What have you been watching?
So I was listening to you guys talking about BABA, and I'll tell you why it popped. Because if it had lost its recent lows, it would have gone down to like 180 or 175. So the alternative was to pop it. News or not, it was in a better long opportunity than short if you could stop yourself out below the low that it did the early May. I think it was 204 and change.
Yeah.
And if you want to gauge on the way up, like you said, Dennis, you were waiting for a dip. If I would use the candle around April 12th, the edges of it, and it's kind of like a doji-ish candle. So I would not chase it into that candle. So also it's now contesting areas that it had trouble with before. So caution on that one with the FXI as well, the whole Chinese market. It was head and shoulder-ish, and now they were trying to recover the neckline. So onus is on the bulls to take that out. This is an agnostic opinion. I don't have a trade on it. I did short the FXI, but I'm out. So
is this just kind of a catch-up trade a little bit? I mean, we've been bouncing back on the SPY is almost at or making new all-time highs here this morning. And, obviously we look at China and it's down, significantly from the highs that we got back to in February. So is this just kind of a little bit of an excuse to come? Maybe this three kid thing is the excuse to come back in and buy some Chinese stocks?
I think you can trade them on their own merit. If you're
Okay.
dealing with the big companies, that's what I'm doing. I'm literally unplugged with the news. I am up to date with the news because I just read the headlines on Twitter and I just swipe right and then they go away.
Yeah.
And then I dig into facts. Like if I'm waiting for a report from somebody, I go to that somebody and get the report. So if it's been successful to actually trade the fundamental story, like if they have a P&L, and then add to it the technical side of it, and you don't need to be really a technical guru, just basic knowledge of charts, just basic knowledge of charts and no tools could get you going to avoid the obvious chase mistake. Like you said, you don't like to buy the rips, and it's easy to avoid that. So if I look around, I have a problem with the fact that we have the biggest tails everywhere as far as stimulus and all of that.
Yeah.
Apparently, there is another check that hit. Has anybody charted the stimulus checks with the small caps complex, like the AMCs and whatever?
That would be good.
I'd be interested to see if those.
I would too. You find that, send it to me, Nick.
I know two of them are peaks last February and now. I know because my son is 19. He got a stimulus check for some reason last week out of nowhere.
What? Wait,
yeah.
what?
Yeah, $1,400. It said economic relief check. So there are stimuluses.
I want to check my bank account. 1 second.
Yeah. So anyway, he got it, and I asked at the gym. There's all of my people I work out with that were early 20s. They also got checks. So I didn't know there was one coming. So is this part of it? Anyway, but the point is, you can't short anything with hard lines, because unless you put a stop. For example, the EWG, I was short last week. I was green. I didn't book my profits. This is my second go around with it, but I want to stop out because if they do take it out, it's two prior major fails, 2008 and 2018. So it could have a lot to run. So you can't be a bear with conviction. You have to trade whatever is going on in the charts. So if I'm bearish with my opinion, and I am a little bit, I won't fight it. I'll ride it up. I'll flip from bearish to bullish and ride it up, and vice versa. So this morning, I think my VIX feed was broken because the VXX and the VIX were holding up relative to the last prints I see. But then suddenly now the VIX just flashed low 15s. So I had a note to myself, if the VIX is at 15, buy some puts somewhere. Because
it's cheap enough that
why is it at 15? That's like the olden days. And if it's the olden days, why we have $6 trillion coming into the economy? So it doesn't make sense. So I just want to be flexible and trade both sides whenever they happen. So it's almost like you needed to buy a straddle last week.
And another trader in chat saying it's college students, and it's college students who claimed as dependents are getting that third and fourth check. So there you go. So I didn't know that. Okay. Today I learned.
So a lot of these college students are throwing them right back into small caps, Nick. So I think you're right.
Yeah.
What's the hot stock that I can get? Make this $1,400 into 4,000 or 5,000 in a hurry.
And they are talking stocks, 19-year-olds, which never do. They're talking trucks and cars and girls. And now they're talking stocks and Bitcoin and stuff.
And what's up with Bitcoin now?
Before you change the subject, Joel, I got another question for Nick here. And I just look at this and you think, okay, well, your college kids are getting, the stimulus checks, the younger generation, they're not interested in making 5-10%. They're not interested in making, they're not interested in Apple and Google because you know what? Google isn't going up 100% next week. Apple isn't going up 100% next week, but some little small cap might. Do you think this trend lasts? Because maybe it continues for a long time. Maybe small caps, this is the time where small caps really start to outperform mega caps because the whole new generation isn't interested in mega caps.
I think since the SEC is not enforcing the rules of manipulating stock prices from either the hedge fund side or from the boiler room sides.
Good point.
They need to segregate them like they did with the pink sheets. So make it a playground where people know that that's what's going on, so that everybody that's participating is a willing participant in manipulation. But if they want to keep the playground level, like if I'm not in the Reddit room, I'm at a disadvantage trying to trade AMC.
For sure.
Because I'm not privy on what's going on and when are they meeting, when is the rave going to be. So
when is the rave going to be?
Or in what warehouse and what packets not to pick up and what pick up. So anyway, you're at a disadvantage. So they need to make a playground special for that. I mean, it's fine. If you want to fight unfair, put them all in one room to fight unfair.
They did. It's called Robin Hood.
Ouch, I didn't say that.
Hey, I'm just kidding. Joel, what's up?
No, I just we talked about Bitcoin when you were on a couple weeks ago, and it's just not the flavor anymore. I guess there's more an AMC consolidation period, pull back off the highs. I know you were cautious up there at 50, 55, 60K. I mean, is it had its run? Did it just have a wild consolidation? Or are you trying to lean on that low? I don't think it was from last week, but the week before.
Right. Every time we talk about Bitcoin, the conversation, I always compare it to gold because it is this weird thing that is worth a lot that doesn't do much, right? But besides that point, the trading process for this thing is accumulation over time. So the slam dunk thing to do with Bitcoin is to buy it on every major catastrophe. So wait for the next major catastrophe. So if you want to actually trade it, I can give you my direction on this. If you pull up the weekly chart, you eliminate all the noise, and then you see a lot of tails going into 28 plus. So that means that the market is refusing that area harshly within the week. So it hasn't closed on a weekly basis there. The lowest close I think was 33.4 or something like that.
Yep.
On a weekly basis. So that's your guide. Now, if that fails, so I think the trigger would be if it goes below 30, it can go to like 12 or 9 technically. That's where you add if you bought at 60. But the idea is to accumulate over time. And if you do what Dennis does, you don't chase these mega spikes and you just say, you know what, I freaking missed it. Let me catch the next time. Then you're likely to do better that way. So I wanted to get into Ethereum when it was in the low 1000s. And then by the time I funded my account and everything, it was already 4,200. Yeah. I funded my account. I didn't buy it at 4,200. I bought it in the low 2s. And I will add if it goes down to 900 or 1,000 or 1,200 where I wanted to buy it. And I will add and I will add and I will add until I get to my point at the end. So that's the idea that I'm trading with. So technically,
keep dry powder too. Like maybe don't go all in on your position all at once too. Like maybe if you're going with that strategy, the Kathy Wood strategy to a certain extent, where she's going to put in 0.1% of what she wants in it every single day for the next 6 months. I mean, she's just dollar cost averaging into it. So
January for Bitcoin, the first weekly candle, January 4th, the edges of it is the sandbox we're playing in now, the high, the low, and the guts. Use that as a guide as to the price can ping pong in between if you want to buy the low edges of it and exit at the upper edges of it. And then know that as soon as it loses either sides of those edges, it will carry momentum in that direction.
What about some of the growth stocks that we've been talking about? They've had some nice rallies off the lows, maybe like a Fastly or a Datadog or something. So, I mean, getting in is one thing, getting out's another. The second time up,
exiting the trade is an art.
Yeah, talk about possible exits on some of these things, or
so here's how I dealt with Fastly. I traded it actively and I shared it many times. And one of the times I shared it, it fell apart. So then, but the credit put spread ended up surviving under pressure. So it took big panties, so to speak, to stay in it because it got tested. But here's how I would handle the pressure for myself. I look at the P&L for Fastly. It has a P&L. It is growing fast. And it doesn't have any flagrant fouls as far as fundamentals. So I knew I had the fundamentals to support me. The price to sales is like 17. So I wasn't panicked. So in the credit put spread scenario where I sell a put and I buy a put below it, it's a bullish position. I wouldn't defend it. I would actually take the stock and sell my protection leg and own the stock with a lower break-even point. So that Fastly situation was easy to handle. But what I'm looking at for the NASDAQ, like you said, all these growth stocks bounced, right? That was job number one for the bulls. Now the question is, will they retest the level from which they just bounced? And if it fails, that's a head and shoulders of sorts. That's a neckline they lost and we're going lower. Or will they use this to attack the necklines that are going into the early May failure points? And can they break out from those? So this week, I don't believe they can do it. That's my binary bet. Okay, so it's not a fundamental opinion. It's a binary event at the end of the week. What Powell's going to say, what the jobs are going to say, how will we react to them? So it's 2 coin flips, and we don't know which way it's going to go. So my gut is that we can't bust through it, and we could come back and retest the neckline and have a tizzy of sorts, and the media will go over crazy, and we'll see what happens after that. So trade it one leg at a time. And the easiest way to hedge a portfolio is by selling bear call spreads, credit call spreads in the SPX. You say, what if I lose money? It's insurance. You lose money on your insurance every month. That's its job. If you don't lose money on your insurance, it means you crashed something, or you got sick, or your house got burned. So that's its job. Balance a portfolio. Then every day you have something to claim victory on.
And with these stocks too, I mean, they don't necessarily have to, keep going up at the rate that they were, but a lot of times you look for consolidation periods, 2 or 3 days, 4 days, staying in the same area, and then, the volume tapers off, and then, you get a break out of that range. But this one has just kind of been slow and steady moving up. But
which one are we talking about?
I was just talking about just something like Fastly.
Okay, so Fastly, if you want to talk Fastly,
bumping up.
It has a big gap down on earnings, right? And it's just eating into that gap. Where is it this morning before I start talking? It's flat. Okay, so
yeah, it's at $30 now.
so it's into the gap, maybe not. So in my opinion, my experience in gaps on earnings like these, they're very hard to start to fill. Look at the one before it. Last earnings report is still open, right? And the one before it, like 2 earnings ago and then some, it got filled by after a lot of hard work. So I wouldn't chase it going into 60 or 56, because that's where the machines are going to sell it. Try to. So watch the resistance and watch if it retests and fails below 40. I would get out, not because I expect a disaster, because I don't know where the bottom is. And you think, oh, Fastly will never go there. On its own, it might, but I don't know what kind of environment. They don't trade in the vacuum. So it might fall through no fault of its own. Like if the market's correct 10%, what's going to happen to $40 in Fastly? If it doesn't hold, I don't know where it's going. So it all depends. It has good fundamentals, but I'm not willing to be the guy holding the bag all the way down to 22.
All right, Nick Shaheen is the author of Create Income with the Option Spreads. You can also subscribe to Nick's Benzinga Options newsletter. The link is now in chat. The link is also in the description of the video. I highly recommend that. Nick, always a pleasure. Thanks a lot.
Thanks for the opportunity. I appreciate it.
All right.
Thanks, Nick. All right, S&P, we stuck up to 28.25, back at 23.75. All-time closing high, right up here at 25.25. Of course, the all-time high was back on May 10th, and we got up to 38.25. But already have had nearly a 40-point range. Been getting those kind of ranges overnight, but not so much during the day sessions. But right now, still up 21 handles at 23.50, and AMC just bumped over $30 here, over 31, up 497. Big volume trading in that one as well.
There's a reason I switched to overnight trading 10 years ago as opposed to intraday day trading, because the big moves and the big money happens overnight. I switched back. So if you look at my career, 1999 to 2010, I was a pure day trader, selling everything at 4 o'clock, taking nothing home. I had long-term investments, but just in the trading account. Basically, I was out. Until 2010, I was out. 4 o'clock, flat, and you know exactly how you did. Now I'm like, I do lots of overnight trading. I take stocks home. I think, what's the catalyst coming up? What are they going to be talking about on CNBC tomorrow? And that's why, like we get the run up into the Ford event, a classic run up. You get, run ups into different things. But I mean, the big moves, Joel, have happened overnight. The statistics show it too. For years, liquidity is lower overnight. This is when the big moves happen. And if you just
stocks are not even. I mean, stocks open for part of it, but I mean, what were the trading on Sunday night, Monday? taking it down and bringing it back up. But
there's big moves overnight. I'm not saying everybody should, all of a sudden change their sleep schedule and stay up all night and trade the SPOOs all night. Just saying, I've introduced overnight trading into my P&L in the last 10 years, and it was the best decision that I've done.
That's why we started pre-market prep.
Yeah,
right?
because there's lots of
PreMarketPrep.com.
opportunity in overnight trading. You hear day trading, day trading, day trading. I am an overnight trader. I try to predict what they're going to be talking about tomorrow. Like buying earnings stocks 2 days before they report. Why? Because they're probably going to be talking about it nonstop, and that'll push the price up if they're talking about it nonstop in the media on CNBC. So, it's a classic example. Run up into the earnings. Why? Because they're going to talk about it. So, and sometimes it's just the money's going to flow into that. You've got jockeying ahead, people speculating, oh, I think this company's going to blow it away. So there's all those reasons why these stocks tend to gravitate upwards ahead of their earnings reports. So, there's lots of different, strategies with overnight trading, but just trying to tell you what Joel's pointing out is we got a 40-point overnight range. The big moves have already been made. The big money has already been made here overnight. Sometimes they have some reversals. Sometimes they have some other things that happen intraday, but a lot of money made overnight.
All right. Let's, what else we have? I did see some analyst ratings there. Nothing super jumped out to me on them. To Analyst Tuesday, but maybe with the 3 day.
There was one I saw.
Well, I mentioned the NEO earlier. The big one, aside from NEO, Citigroup again going to buy.
I would say it's Boeing.
Yeah. You know what? That's interesting as well. I saw that one. Let me pull it up because I saw it come across my screen and I didn't read the whole thing.
I'm mad at myself here. When I bought Las Vegas Sands a week and a half ago, I thought about Boeing as well. And I'm like, I should buy Boeing too. It was like 225 then or 230. And I'm like, if Boeing had the big run, it's come all the way back to where it was. And like, I should rebuy this. And I did not. And I'm mad at myself for it. Now you get an upgrade. Yeah, this could kickstart. I think there's room to 260 on Boeing. I don't own it. I wish I did. I picked the wrong one, obviously, because Las Vegas Sands hasn't done nearly as well as Boeing has in the last week and a half. But I think the reopening trade is for real. I think Cowan, probably the upgrade here this morning, is saying that the reopening trade is for real. I just think that there's still upside here in Boeing.
290 is what Cowan says Boeing will be at in 12 months. Outperform rating.
It's not going away. I look at where you are in the U.S. I look at where we will be in Canada here eventually. I'm getting vaccinated on Wednesday. As the vaccination rates go up, people are out there and they want to do stuff again. You saw it in Nashville. You were just in Traverse City. I'm sure there's lots of people getting out there, spending money, doing things. The reopening trade is for real. And the AMC is for real. People are going to go to theaters like crazy off the hop here. And, it's not surprising that maybe a stock like this, you can say, well, there is fundamentals behind it. And there is to a certain extent. Now, I just argue that 200 million to 11 billion, a lot of that good news is priced in. Maybe there's some better places, safer places for your money. But the reopening trade is for real.
I saw that some airlines are banning alcohol sales now because of
fights over masks.
And rowdiness and stuff, man. You think people be happy enough just getting back on a plane and going somewhere, why do you need to get in a fight?
Joel, on my flight to Nashville, which, wasn't exactly like, huge plane. It was on the smaller side. They ran out of alcohol.
Everybody's I'm doing it up and having a party. They drink them right out.
I was in the back of the plane. By the time they got
Did you drink all the alcohol?
By the time they got to me, there was no alcohol.
You didn't mosey up to the stewardess back there to see if they had anything, any extra stash back there at all?
He's like, oh, you got a little hidden. I know you got a little hidden one back there just for your good customers.
For Joel would have done. On the earnings note, here's the calendar for the week. Not a ton, but we do have Zoom tonight, which is interesting. Yeah. We have Canopy Growth this morning. We can talk about that.
Did they report already?
Yeah, they're out.
Let's talk CGC.
Losses wide. Their sales came in above estimates, but the losses are widening. I haven't looked too much at what
does that matter.
This morning. I don't know.
It's had a good run, but I don't know. It sold off so much. The hard stock. It always earnings can be turning events. So you almost got to wait for a day, let everybody that's speculating and jump in and trade their earnings and see what happens. But this thing can hold up and go green again. Maybe it starts to get kickstarted again. I don't mind buying dips on this from a technical basis, but I think I'd wait a day until it digests the earnings.
Nice move, really, from 22 to over 26. Not much over 26. If you're 26.55, recent low at 22. So if you're looking to buy the dip, there's a little wow. We're still buck 85 away from this $24 level. Couple lows in that area, coming back on the upside. I don't know. This one's being sneaky on an earnings day. They don't like the report, but it's not that red. So you get above 26.09. Take a look at that 2065. And if you're looking for like a really a better level, a hard level to lean on the upside, a lot of congestion at 28. That was from the end of April and early May. Taking a look
All
at
right,
that.
wait. Mark Budd is asking if the NASDAQ will halt trading on AMC if it goes too high. I don't think we're anywhere near that territory yet. I mean, AMC is
you have volatility halts all the time. I mean, we get the 5-minute volatility pauses. That's infrastructure that's in place on everything. So if you're talking the 5-minute halts, I mean, those happen, you know, the 5-minute volatility pauses.
I'm not sure that's what Mark is referring to.
But if you're talking a long-term halt, it's rare for an exchange to just step in and halt a stock because of price movement and asking the company for news. You know, that's rare to happen. The volatility pauses happen all the time. I'm sure you'll see volatility pauses in a lot of these stocks, but for, you know, the exchange to come in and say, we need more news, why is your stock trading? Very rare for an exchange to do that.
Right. And let's remember, you know, we still have the precedent of January, right? So AMC, you know, is well above those levels now, but GameStop, I would argue GameStop was crazier then than AMC is now.
But they never halted GameStop,
right.
did they?
That's what I'm saying. Right.
Yeah. So they didn't do it GameStop. I don't know why they would do it now.
Right. That's my point. I don't know why.
This is a very important day for AMC. It's gonna, you know, like, I don't know if we're gonna call an inside candle, Joel, but it could easily have an inside candle 24 to 36. I mean, 50% range on Friday. An inside candle is probably not that bold of a call, but you get up near the 35, 36, you got a few bag holders that would probably be selling. You get down near Friday's lows at 24, 25, you probably got buyers. I do think the vote of confidence is worth something. I'm not surprised the stock is trading up. I think you'll find support down to 27, where Mudger Capital is taking an investment. But for me, if I was in this, it would just be a trade. I have no position in it right now. Maybe I'll day trade it a bit, but it's tough stock to call.
All right, I'm gonna hop over to PreMarketPrep.com. Missed a lot of symbols here, so I'm gonna hop over there, check out the site, did a lot of hard work on it, and let's get these symbols done and get some levels headed into the open. So Spencer will catch you at 3:30. All right, Dennis, go get them.
Catch you guys a little bit later. A couple of programming notes. So we're usual stuff today, usual stuff tomorrow. Thursday and Friday, we have our next Cannabis Capital Conference. So we're going to have pre-market prep on those days. And then after pre-market prep ends, no usual shows until like the evening, because we've got the Cannabis Conference going from like 9 to like 5:30. So if you don't know what's going to happen here, check out this trailer for the Cannabis Conference Thursday and Friday. Again, it's a free conference. You can go to bzcannabis.com to learn more, or just you can watch it again right here on youtube.com/Benzinga. Before I bring on Matt Hammond to talk IPOs, I want to remind you all that our 100,000 subscriber giveaway is ongoing. We have not gotten to the threshold yet. We're at a little over 98,000 subs. We are giving away one free share of Tesla after we cross that 100,000 subscriber mark. Here is how you can enter. I just put the link in chat. It's also in the description. So again, the Gleam YouTube code is SLIMERAZ. All right, let's talk IPOs. Let's bring on Matt Hammond from IPO Warriors. Matt, hope you had a great weekend, sir. Short week this week. Does that mean the IPO calendar is any less busy?
It does, Spencer. The IPO calendar looks a little bit thin this week, but there is always the chance that we will get one of these stealth IPOs, and I have seen some kind of hints that we should at least be on our toes and be ready to jump in if this one that's sort of teasing us in the shadows does come live. But this is a good time to kind of brush up on our strategies, a good time to kind of prepare yourself for the next wave. These things do kind of come, in bunches, and we just had a bunch last week that did pretty well. And this week we have a little bit of a time to breathe and focus on balancing our portfolio a little bit and, prepare for the possibility of one of these special kind of Chinese crazy IPOs. So Last week we had Paymentus, ZipRecruiter was a direct listing, Figs, and Centessa. These were the kind of top performers of these. The ones that I called out were Paymentus and Figs, and they all kind of followed a pretty similar trading strategy that is something I've mentioned before, and we have a little bit of extra time this week, so we can focus on some strategy plays, some strategy talk. The strategy I want to talk about today is the 50-50 exit strategy. And this is kind of balancing your exits where, a lot of people are like, when should I sell? When should I sell? I said, well, sell when you're up and sell in portions. That initial spike is a great time to take some profit and put it in your pocket. Then you can let the rest ride and, hold for the day 2 rally, hold for that end of day 1 spike. You're in a little bit more flexibility. You've built a little confidence. You put some money in your pocket, and you're giving yourself a chance to profit and then maybe profit some more. And this is a strategy that I like to play, and I often kick myself when I don't play it. Got a little bit lucky this week with one time I didn't play it, but let's jump into it so I can really show you what this means. Get my cursor up here. Okay. The end there. Bear with me. Okay. So Paymentus, I like Paymentus. We talked about how it's profitable, how it's growing. And as you'll see, it opened up at 28.76 and it gave us a nice little run up to 30.76. So if you sell half of your position right here, you're in a good little 5% win, 4 to 5% win area. And you have to remember, this was a low float to begin with. This was 10 million shares. So you're going to see that the trading gets really spotty by day 3. The volume really dried up. And even though you got a run up here, it's not easy to liquidate, 1,000 shares or 2,000 shares if you're playing this with bigger volume. Each one of these orders might only be 100 shares or 500 shares at a time. So if you're playing a low float, not super popular IPO, you're going to get the most volume on this first day. By the second day, you might not get that run. And you might be like me, you might end up holding some shares here into the second day run. And it got a little bit tricky. And I'll go over this in a minute because there's some really great strategies you can use to optimize your profits here. But you want to look for take this profit or take at least some profit off the table right on this initial spike. Saw a similar thing here with ZipRecruiter. ZipRecruiter opened up at 20, which was, the indication price. So you're not paying a huge premium. If I hadn't already been playing pay, I might have jumped into ZipRecruiter at this price. It gave a little bit of a dip, but just for a minute. And then it ran where it runs up here to 21.50, 21.40. You can take some profit out right here, and then you can wait and see what happens. A lot of times when we see these popular brand name IPOs with retail recognition, retail demand is going to show up after this media cycle. We talk about that a lot, about how after the first day, the media picks up and says, oh, ZipRecruiter jumps 10% or 15% off for the IPO. And a bunch of people who weren't even following the IPO, who aren't watching this show, who aren't getting the newsletter over at IPOwarriors.com, hint, go sign up for it. They come home from work, they read the newspaper, they see the headlines about ZipRecruiter, they say, oh, that's a great company, that's how I got my job. Oh, we use them all the time, they're going to do great. And you see that a lot of times on the day 2, we get this morning rally where people who weren't aware of the stock before heard about it on the news, read about it in their news feeds from Google, and we see a rally into day 2. So I really like to play this strategy where I'm taking 50% off on the initial run, and then letting to see if I have a lot of confidence in the stock. This, you want to measure your confidence level on this kind of play. And if you are confident, still take some, at least 30, 40, 50% off initially, and then give yourself a chance, give the stock a chance to run on that second day and take profits on that initial run. If you really want to let it go, you can set a stop loss maybe underneath this flag, let it run to 2176. Sometimes we see these just step up and up and up. And, this is what I really like about the 50-50 play. And 50-50, I mean, you could do 20-20, 20-20-20, you could 30-30-30, you can do it how you want to. Figs was one that I had a lot of confidence in. E-Trade kind of tripped me up here because they were offering this to traders, offering IPO allocations. I submitted a request for allocation, did not get a fill, which gave me a good indication that this was going to have high demand. But then they forgot to undo when they are offering an allocation, they will suspend trading in this pre-market, and usually until about a few minutes before it debuts. And they forgot to remove the suspension until after it had already kind of made its initial run. It was about 10 minutes in before I was able to even place an order. And by that point, I was a spectator. I was a little bit peeved by that, but nonetheless, you see the strategy of letting it run, either take off on this first, spike up, or if you had a little bit more confidence, let it run to the second spike, but you should be taking profits right here, at least some. Then let it run. This was kind of an anomalous spike at the end of the day. I don't know how you would play that except with a phantom limit order. But if you did hold through day 2, took a little heat there, but nothing below your entry point, and then you got step. So there was a lot of reasons to see, to have bullish confidence in this play. One thing that I'm starting to recognize a little bit is that some of these stocks that have female CEOs are getting a lot of interest from Wall Street. There's a lot of pressure on investment companies to support female-led businesses. Figs is a female-led business. It's a highly profitable, growing company with a lot of space to expand into other industries. It got a lot of positive media coverage overnight, and there's a reasonable intention to have second day confidence in this. And if you did, you were rewarded pretty handily. Centessa Pharmaceuticals, I don't play biotechs usually because demand can disappear. I really don't understand them very well. I did like what I read about Centessa. They have really built a company that's not just about a single drug, but is about creating companies that have, they have about 9 drugs in the pipeline. They have a drug that's in stage 3 trials. There was a reason to pay attention to this. I didn't play it. I was still exiting my Paymentus position. But you see, this one gave you a lot of comfort if you played it. Pretty much went straight up to about a 10% win. At this point, you could take, half your profits here. It went into a into a pennant formation and then ran again, take another 20%, exit the position fully at 20%. That would have been a very straightforward play. No need to overthink this. No reason to hold this. You don't want to be stuck in a pharma play for 2 or 3 days. They usually don't get the kind of retail recognition or media hype that the brand name will get. Your average trader doesn't know anything about pharmaceutical drugs. So a cool one to play. If you played it, congratulations. You definitely took a win. If you didn't, you're forgiven. You're excused. That is what it is. Okay, I did want to talk a little bit about how to exit low volume trades, because you'll see this a lot if you're playing IPOs. You'll see stocks that you got into, maybe you thought they'd do a day 2 run, or even if they do a day 2 run, you end up in a situation where you're trying to get out with not a lot of demand. Doesn't mean you can't take profits, but you really need to exercise a strategy in optimizing those profits, because we're seeing a big spread in the buy and the ask orders. So with Paymentus, which we'll get to in a second, we saw buy orders that were like $30.25 and ask orders that were like 31.50. And if you just sold at the market, you were cutting yourself out of, you know, $1.50 per share. Whereas if you took a little bit of patience and set an ask order just below, you know, the next big ask order in the level 2 sell orders, you set yourself up to take, you know, a substantially larger profit. And by watching those level 2 ask orders, which I'm saying here, especially when it's bullish, when the stock starts moving up, that's where you want to start trying to undercut the other ask orders. So you're not selling at the bid, which can be, you know, 50 cents, $1, $1.50 per share lower than the ask. You want to kind of like take out portions of your position. So I had 800 shares and I didn't want to just set one sell order at 800 shares. I wanted to put, you know, sell orders of 100 shares or 200 shares. That way the other big sellers aren't undercutting me. You don't want to get into this jockeying thing where you're, you know, both pushing yourselves down. You'll just push the price down, and, you know, it becomes kind of a tug of war between the bidders and the sellers. But it also becomes a little bit of a jockeying game between the sellers to try to, you know, get in front of, you know, get cut to the front of the line. Now, if the action is bearish, if you can see that it's reached its peak and now it's dropping down, well, now you might just want to get out with a limit order at the bid order price. Just take your money while the buyers are in the market, because once they're gone, they might not show up again. And here you can see it very clearly. This is the end of the day of Paymentus. Right around here, this was about 3 o'clock. It started building up. And you can see it went from about 29.30 and it peaked over at 31.80. So at this point, these are very thin order, you know, it's a very thin order volume here. And we were seriously seeing, you know, this might have been 3 trades, 1 trade here, 1 trade here, and 1 trade here. So if I had just sold at the market, I would have gotten out here and here and here. Instead, I kept setting my limit orders just above this, just above this, just above this. And I managed to get out at least a handful of shares up here at 31.85, which was actually right here, just perfectly, you know, perfectly dangling my lure up to where the fish were having to jump out of the water to catch it. Once it got bearish, well, now you want to start just selling with what you can get. And you don't want to be holding all your shares, you know, or a big portion of shares once volume completely disappears, or you really could be stuck with this stock for a while. And, you know, I'm trying to like get my position out going into a 3-day weekend. You don't know what's going to be happening after the 3-day weekend. And I want to be liquid so I can play additional IPOs as they come along. And just to review this a little bit more clearly so you guys can really see what I'm talking about, when it's bullish and you want to exit from the low volume, you want to set your limit price right below the next big level 2 ask order. So here we see how many shares there are. Okay, 200, 200. I'm going to probably try to get out right here with maybe 22.95, or at least I'm going to let my order sit there for a little while and watch. You can see here we've got 21.07 was the bid, 22.27. So you got $1.20 you know, difference in your profits, which if you're, you know, 200 shares, that's $200, you know, more than that. So this is why it's important to really manage these. Look at that level 2 data and set your limit orders, you know, at a competitive, but not, you know, you don't want to be on the other side of this guy because he's going to take a while to get out of his position. You want to be getting out before that guy. So in this situation, you want to tempt the buyer, but you want to discount the big seller. The next situation is when it's bearish. Now it's starting to go down. The stock is, you know, the price is starting to drop. You can see that, you know, maybe the number of bids is pretty thin. You don't want to be stuck with this and you're saying, okay, well, maybe I bought at 20, so I'm willing to get out here with the profit. I don't want to go into the weekend with this. You just set a limit order right at the bid, get out, or even below it, you'll still get filled at the bid price, just to get rid of your shares, take your profit, and, you know, sell while the fish are still biting. You have any questions about that, Spencer, or am I just going to jump into the IPOs here?
We got about 9 minutes left, so go for it.
Okay. And just to recap, this is a great strategy for any time you're trying to, I mean, any day trader will tell you don't day trade stocks with low volume. I mean, you want volume, but anytime you do get stuck in a position where you're trying to exit a stock that's not delivering a lot of volume, this is a good strategy. This is what I like about IPO trading. It will teach you a lot of skills that you can apply to general trading. So this week's featured IPOs, there's really only one on the calendar, and that is dLocal, which we'll talk about in a second. But we can't ignore the possibility of a stealth IPO coming along and giving us a great opportunity, though not without risk, to take massive profits. So first, let's go with what we do know is on this calendar here. We've got dLocal, ticker DLO, scheduled to debut on June 3rd. And what this company does, provides localized online payment solutions for emerging countries. So, for example, Microsoft is selling their software in Nigeria. They don't have and don't want to get all caught up in how to set up online payments and banking and all this, all this complicated stuff in a country like Nigeria. So they come to dLocal, and dLocal provides them with the payment gateway solution for enabling online purchases of Microsoft products in Nigeria. Same, Amazon uses it in some countries. Didi uses it in Argentina. So they have, Didi is China's largest rideshare company. It's the Uber of China. They also operate in other markets in the world. And so the point is, dLocal has major customers. They're incredibly profitable. They're growing revenues at an insane rate, 124% year over year, growing profits at 110% year over year. These are some of the biggest numbers that we've seen in terms of startups that I've never heard of. Their IPO is a little bit pricey. Their indication price is already 39 times revenue. So, you're paying for growth, but you're also paying for a company that's already profitable. The float is, I believe, 29.4 million shares. And interestingly enough, I think about 75% of that is insider sales. So they're not really raising that much money. They are raising, I think, about 25-30% of it. But I think the point is that they're giving their insiders an opportunity to capitalize on their long-term investments. They're not in need of cash flow. But there are some, they said they're using their money for possible takeovers, improving business. But this is, I think, when I look at some of the other global Flywire wasn't quite the same thing. But some of these international payment things, they've done pretty well on the IPO. So as long as we don't see a ridiculous premium between the IPO price and the debut price, this one is, and it's the only one this week, so I'm sure I'll be playing it. Question is how heavily and what strategy I'll use. But I think that there's a reason to believe that this will be popular, and at least for a 50-50 play, if not just take all the money out at the beginning. It is on a Thursday. I don't want to get stuck on a Friday trying to jockey out of this one, but it's the only one on the radar so far. And speaking of radar, let's jump into what I think might pop up this week, which is a stealth IPO. You got something for me, Spencer?
No, keep going.
Okay. So the stealth IPOs, we've talked about these before. I send out the updates in the newsletter when I find these. If it does show up on the calendar, it'll usually be either late at night the night before or early in the morning the day of. If you sign up for the newsletter at ipowarriors.com, you will get those alerts. Now, the stealth IPOs, some of them have run up 900% over 2 days. We're talking about UTME. We're talking about TIRX. We're talking about EJH from 2 weeks ago. If you want to go back and check those symbols, you're going to wish you had been in on those. It doesn't mean that every single one of them runs, but there are the ones that I have caught have so far offset the losses that I took that it's ridiculous. I mean, I took TIRX. I bought it at 17 on the debut, and it jumped to 50. I mean, and I had 1,000 shares, so $33,000 in, just had to sit through the halt. So the signs that we've seen on all of these, the things that they have in common is that they're Chinese companies that you've never heard of. EJH 2 weeks ago, well, it's a house cleaning and appliance services company. I mean, there's no reason why you would want to own that stock. But it debuted at something like 16 and ran up to, I think it was 50, 45, something like that. So, you want to be in these if you can spot them. This one is private education company. Okay, who cares? They all usually indicate, at least they're priced at $4 to $5, usually $5. The float is almost always 5 million shares, and we never hear about these until the day of or the day before. In fact, most of the time they debut without anybody hearing about them. And I have my theories on what they're really doing, and I believe that there is some serious money laundering, or, well, that's my best guess. People moving out their money out of China into Western markets by, floating these low volume, unpublicized IPOs, and basically, matching share orders against each other, running them up, and transferring money out, because the difference between the offering price and the peak is inexplicable, and it's insane. This one was the reason I'm on standby for this one for this week is that it was filed. If you look at the IPO filings, it was filed on May 7th, which is the same date as OMIC, which debuted last week. And the other IPOs from last week were all filed in the same period. So I was thinking maybe it would go live last Friday, but it didn't. And so I'm really watching. It seems like the timing is lined up for this week. Another hint on this one is that it's underwritten by Network One Financial. Network One Financial is the same underwriter that did TIRX, which is the one I just told you about that I took a nice play on. And Network One Financial has also co-underwritten several of these stealth IPO or several IPOs with Bosted Securities and Sutter Financial. Bosted Securities and Sutter Financial, they're actually like one company, partnered companies. Their websites are identical, just with different URLs and logos. And Network One has worked on several of their IPOs, and Bosted has probably launched most of the stealth IPOs that we've looked at. They did they did UTME, they did eBet, which wasn't exactly stealth, but did have that same kind of run. And all of these hints show me that I don't expect GSUN to be highly publicized. If it is, okay, I'll reconsider. But if it just shows up one morning and prices debuts at $20 or less, I'll be going in pretty heavily. We did see JZXN was another stealth IPO that debuted at $45 after pricing at $5. You don't want to touch that. That's just too much. And if you had touched that, you got burned pretty hard. It dropped from 45 to, I think, like 7 over 3 days with no spikes. And that's my next point is stealth IPOs don't always run. What you're looking for is an immediate halt. It's like it goes live and it's already halted and your order hopefully already got filled. Once it goes into that first halt, you might want to think about at least trimming some of your position. Now, as soon as it opens out of that first halt, if it goes into a second halt, you've probably hit one of these Jetstream, stealth IPO runners that just goes crazy. And you don't want to celebrate too early. You want to start taking positions out after each halt. But you want to keep some skin in the game in case it really does one of these 10x, 9x, 10x runs. As soon as you see it open and start actually being tradable, in other words, it stopped just halting. And we saw UTME go into 9 consecutive halts to the upside. But once it starts actually trading, that's the time to start getting out. And you might need to just get out with a market order, which is generally not what you're going to do. But even a limit order or a stop loss, there can be a lot of slippage in these things. So you want to act quick. You want to have your finger on the trigger. This is not something to go, to play and then, go to lunch or hit the gym. If you're going to play this trade, you want to be glued to your computer, sitting through the 5-minute halts or 10-minute halts. And while it's halted, really get your strategy down. Look at the level 2 data. And if the bids and asks are both above the halt price, well, then you can expect it to keep running. If you see the bids start to drop below and the asks start to come down a little bit, now the tables might have turned and you might need to just get out. And you don't want to be holding these because once they've peaked, they're not usually going to go back up there. Although some of them have gone on a second day run that could be fun to be a part of. I'd rather take my substantial profits on the initial run, sleep easy at night, celebrate the victory, and go plan for the next one.
All right, Matt Hammond is from IPO Warriors. His link is up on the screen, also in the description, IPOwarriors.com. Matt, great insight as always. I hope there is a stealth IPO so we can talk about it next Monday.
Sounds good. Have a good week, Spencer.
All right, 9:27. I'm watching AMC, obviously into the open. I'm watching oil. OPEC is meeting right now virtually, and I'm also watching. What did I say? I said AMC. I said oil, and I'm watching Chinese stocks, and I'm watching BWMX, Betterware de Mexico. The CEO will be on SPACs attack at 11:15. It's a direct-to-consumer retailer, the first Mexican company to list on the NASDAQ. That'll be at 11:15, SPACs attack. That's going to be a wrap for our stream today. Please remember, all of the information from our show is meant to be used as informational purposes and not for investing or trading advice. David Green is live trading the open right now. This stream will end. It'll redirect straight to that stream, so you don't even have to maybe click play, or if your autoplay is on, it should play automatically. Everyone have a good open. Have a good start to your day, and I will see you later on the day for our other streams. But David Green is going on right now.